On September 3rd, 2025, the company acquired Rotorlab Proprietary Limited, an Australian company, Rotorlab. The company has assumed in the February 2024 business combination of Rotor Riot, a 5-year operating lease for approximately 6,900 square feet of warehouse and office space in Orlando, Florida. The lease commenced in November 2023 and expires in October 2028. In June 2025, Unusual Machines signed a lease agreement for an additional 17,000 square feet of warehouse office space in Orlando, Florida. This space will be used primarily for motor production. The lease commencement date is August 1st, 2025, and currently runs through August 21st, 2030. In October 2025, Unusual Machines signed a lease agreement for an additional 25,000 square feet of warehouse office space in Orlando, Florida. This space will be used primarily for order fulfillment and inventory storage. The lease commencement date is December 1st, 2025, and currently runs through December 31st, 2030. On December 15th, 2025, the company parent entity entered into a 3-year operating lease agreement for an additional 4,500 square feet of space in Orlando, Florida. This space will be used for headset production. The lease commenced on January 1st, 2026, and expires in December 2028. On December 10th, 2025, the company parent entity entered into a 3-year operating lease agreement for an additional 9,125 square feet of space in Orlando, Florida. This space will be used as the company's corporate headquarters. The lease commenced on February 1st, 2026, and expires in February 2029. The company has assumed in the acquisition of Rotorlab on September 3rd, 2025, a 3-year operating lease of warehouse and office space in Canberra, Australia. The lease commenced in May 2024 and expires in April 2027. On September 3rd, 2025, the company closed on the acquisition of Rotorlab. Rotorlab is an Australian developer and manufacturer of electric motors and propulsion systems for unmanned aerial systems, UAS. Its product line includes precision-wound electric motors across multiple classes, from sub-400-watt units for small UAS to high-power motors supporting large rotary and fixed-wing platforms. In addition to the motor production facility in Australia, the company built out a motor production facility in Orlando, Florida, and started producing motors for drones in the fourth quarter of 2025. The company and Rotorlab have been working together prior to the acquisition on co-developing several motor designs and sizes. The acquisition helps the company accelerate their goals of building a resilient drone supply chain through their team and technology. In addition, Rotorlab will continue to serve as the engineering center for the company's motor design, prototyping, and low to medium volume production of orders. The business combination was based on a share purchase agreement, the Rotorlab Purchase Agreement, that was executed on June 12, 2025, subject to customary closing conditions, and was completed on September 3, 2025. Under the terms of the Rotorlab Purchase Agreement, the consideration paid for the acquired assets consisted of I, the issuance of common stock for a value of $4.0 million, based on the preceding 20-day average volume-weighted average price, VWAP, of the company's stock from the date of the signing the Rotorlab Purchase Agreement in June 2025, and 2, the issuance of common stock, contingent shares, for up to a total value of an additional $3.0 million, based on the company producing and recognizing revenue, dollar for dollar, related to internally manufactured motors during the first 2 years after the acquisition closing date. The contingent shares will be calculated and issued based on the company's VWAP for the preceding 20 days on each anniversary date of the closing of the transaction. The company issued 656,642 shares of its common stock based on the formula as noted above, which resulted in an initial purchase price of $1,922,911, based on the company's stock price of $9.02 on September 3, 2025, which was the closing date of the acquisition. The contingent purchase price has been initially recorded at $2,847,000. The fair value of contingent consideration was determined using the Monte Carlo variable scenario model, which values the liability at the measurement date using certain assumptions, including the expected revenue over the calculation period, a discount rate applied to revenue projections, the risk-free interest rate over the earn-out period, and certain estimates and probabilities of different outcomes. The company updated the estimated contingent consideration from the Rotor Lab acquisition to $2,300,000 as of June 30th, 2026, based on actual sales during the period, based on management's updated estimate. On September 3rd, 2025, the company acquired 100% of the issued shares of Rotor Lab. For U.S. federal income tax purposes, the acquisition is treated as a stock purchase. The company did not make an election under Section 338 of the Internal Revenue Code. As a result, the tax bases of Rotor Lab's assets and liabilities carry over from their historical amounts, and no step-up in tax basis was recorded for U.S. tax purposes. Goodwill for tax purposes will be amortized over 15 years. In January 2026, the company received a $2.1 million order in addition to several smaller orders from Teal Drones, which is a subsidiary of Red Cat. Red Cat is a related party, as Jeff Thompson is the Chief Executive Officer of Red Cat and is also on the Board of Directors of Unusual Machines. The order was delivered in the first half of 2026 and includes several different drone components manufactured and sourced from the company. The company recognized approximately $2.2 million in revenue from this related party for the 6 months ended June 30th, 2026. The company had related party receivables of $1.3 million as of June 30th, 2026. On May 7th, 2026, we signed a definitive agreement to acquire Drone NX LLC, which operates as Upgrade Energy, a manufacturer of battery and power system solutions for unmanned aerial systems. The transaction purchase price is estimated at $52.0 million, which includes a fixed quantity of 1,792,012 shares of the company's common stock at $13.9508 per share, which was based on the preceding 5-day volume-weighted average share price of the company's common stock prior to signing the definitive agreement, which is estimated to be approximately $25.0 million of purchase price, which the valuation for accounting purposes could be subject to change based on the company's common stock price at the time of closing. 2. $1.0 million in cash upon closing of the transaction, and 3. An additional $26.0 million in cash, based on the company recognizing $10.0 million in revenue related to internally manufactured batteries during the first 2 years after the acquisition closing date. The acquisition is subject to customary closing conditions, including Upgrade Energy completing their financial audit, which is expected in September 2026. The acquisition adds battery expertise to our domestic manufacturing and engineering capabilities, adds additional drone components to our product mix, and strengthens our overall domestic supply chain and manufacturing capabilities. During the 3 months ended June 30th, 2026, we generated revenues totaling $16,722,467 compared to $2,123,970 during the 3 months ended June 30th, 2026, representing an increase of $14,598,497, or 687%. The increase in revenue primarily relates to the increase and establishment of our enterprise business and revenue related to our National Defense Authorization Act, NDAA, and Blue UAS products. Our enterprise revenue was $14,220,865 for the 3 months ended June 30th, 2026, compared to $192,090 for the 3 months ended June 30th, 2025. We started manufacturing production on certain products, including drone motors, headsets, cameras, and other drone-related products during the first half of 2026. During the 6 months ended June 30th, 2026, we generated revenues totaling $24,818,304 compared to $4,166,270 during the 6 months ended June 30th, 2025, representing an increase of $20,652,034, or 496%. The growth in revenue is driven from growth in our existing retail channel and expanding our enterprise channel, as we are manufacturing additional NDAA and Blue UAS products. Our enterprise revenue was $21,510,234 for the 6 months ended June 30th, 2026, compared to $312,246 for the 6 months ended June 30th, 2025. We started manufacturing production on certain products, including drone motors, headsets, cameras, and other drone-related products during the first half of 2026. During the quarter ended June 30th, 2026, the company continued to strengthen its internal controls, including the implementation of advanced inventory modules within NetSuite for its financial and transactional reporting. In addition, the company has successfully hired additional staff within the accounting, finance, and human resource functions, and the company has updated their process documentation for financial reporting. We believe that these changes and documentation of our internal controls have remediated the previously disclosed material weaknesses in internal controls, which include sufficient segregation of duties within accounting functions and having written documentation of our internal control policies and procedures.